Good morning and welcome to Car Dealer Live. My name is James Batchelor and thank you very much for joining us for this pretty early hour. But it's early because we are talking about new car registrations for December and for all of 2020 using data published as we speak, just being published by the SMMT. Now, joining me as ever to provide some colour, some clarity is ASE Global Chairman Mike Jones. Hello, Mike.
Good morning. You okay?
I'm very well, thank you. Lovely to have you on as ever. Let's just cut to the headlines. Well, before we do that, this is a live show, so if anybody's watching this and they want some questions answered, then feel free to pop them into the comments box. But let's just have a look at the headlines of the data. So 2020 registrations totaled 1.63 million units. That's 29% down on last year, which makes 2020 the lowest year for car registrations since the recession of 1992. December was down by 11%. Around 11%, and total registrations were 132,000. And there's also the Ford Fiesta was the best-selling car in 2020, closely followed by the Vauxhall Corsa and the Volkswagen Golf in third. Now, Mike, let's look at this stuff in a little bit more detail. Looking at what the SMT is saying, there's a lot of strong statements really being made. You know, biggest year-on-year decline since World War II, for example, being one of them. It's easy to look at this negatively, but overall, dealers have done a good job under the circumstances, haven't they?
Absolutely. Dealers have done a brilliant job all the way through 2020, being very honest, keeping their staff safe, keeping their customers safe, and really finding a new way of working, moving towards that sort of omni-channel retailing, handling the customer remotely. We're seeing now with the periodic launch of lockdowns that dealers are really quickly slipping back into closing the showroom, just operating the service department, and their the registration levels given that are really quite creditable. And you sort of look back and on an overall level, we're sort of the lowest level of registration since the financial crisis. Well, given the crisis we had in 2020, and obviously it's ongoing now, that doesn't really come as a surprise. You would expect that given the length of time that everybody's been closed. So, looking at December, that's 11% decline is really quite a low level of decline given the length of time that the showrooms were shut all over the UK.
Yeah, exactly, and let's not forget, December is a quiet month traditionally anyway. So you factor that in with November having a 4-week lockdown in England, and it's not too bad, is it? But understandably, there are some headlines there which do make for grim reading. One of them is, the SMT estimates the Exchequer lost 1.9 billion in new car receipts, and the cost to the automotive industry was around 20 billion. Some might say, looking at those figures, that the government should have put some measures in place last year and to catalyse demand and support the industry. But that was a bit of a thorny issue last year, really, wasn't it?
Yeah, absolutely. We discussed it over previous months. Sort of retailer profitability was strong. Later on this week, I'll publish the November numbers. But as we went through the summer, the post-lockdown period, retailer profitability was strong. Manufacturing and the OEM side of things was more difficult. Hopefully, with Brexit now settled, that might start to free up a bit. It's interesting that sort of post the deal being signed, we've not really seen any movement in sterling against the euro. So it's neither fallen off a cliff and therefore we're not going to get any cars in the country, or massively appreciated, so we're going to become sort of Treasure Island once more. It stayed very much as it was. So no, we're 2021 is clearly going to be uncertain, but 2020 we did a decent job. Just sort of looking into that whilst we've been chatting, or looking into the December numbers, yes, we're 11% down, but three-quarters of that, or just over three-quarters of that, was purely down to a lower level of registrations in the last 2 days of the month, when people were sort of shutting down and across England and obviously the wider UK slightly earlier. So yes, it's down, but nearly all of the drop is down to that lower level of month-end regs. And you can see when you're looking at the individual brand table, there's only a couple of brands that were really pushing at the month end. Clearly, Tesla were going for their 500,000 global sales, and so they're they're clearly up year on year. But lots of the other brands were not trying to rush cars out the way that they normally would.
Yeah, and we were talking about this yesterday, actually, on the Car Dealer podcast. That the words pre-reg are words that I don't think I've used once during 2020. It was something that didn't completely go away, but there were other issues at stake, and also dealer margins and dealer profitability was stronger anyway, wasn't it? So pre-reg was less of an issue.
Yeah, I mean, I think the nice way to put it would be that there was a better balance between supply and demand. As an industry, we've always tried to put more cars out there than there is a natural demand level for, and that's for some brands brought us a significant amount of pre-registration or month-end registration or tactical registration, none of which are necessarily a bad thing, but no, there's been a much healthier level of balance between supply and demand, and margins have gone up across the board, whether that's new or used. It's been we've seen increasing margins across both. Yeah.
Now January is a month when we hear the SMT's estimate for the year ahead, and it was previously thought that 2021 may be around the 2 million mark. I mean, that's going to be revised now, understandably, but I mean, we haven't really started the year off in. I know we're only 3 days in, but yeah, we haven't really started the year in the best way possible by having a lockdown or a tier 4 plus, if that's the way you want to describe it. What are you hearing? I mean, is there a general sort of positive feeling in the air that dealers are used to operating click and collect, and it's something we've just got to get on with really and make the best of?
Yeah, I mean, I am hearing a lot of positivity. People know what they're doing now with regards to locking down. They know how to run the business remotely. They're much more digitally enabled than they were when we went into the first lockdown at the end of March, and so they're ready. They're almost ready to enact their plans. We've still got the furlough scheme around till the end of April, so we'll see lots of people being furloughed again. Yesterday, the Chancellor announced a grant which should be worth up to £9,000 per site for sort of top-up grant that people can get from the local council. So there is support out there, and also consumers, I think, are tiring of being locked down and will still want to do things. And car dealers have done a brilliant job so far of working with customers to meet their needs. And as they sort of get itchy feet and don't want to be locked up at home, I can see more and more people continuing to buy cars and using that sort of click and collect provision to a home delivery, etc.
Yeah. I mean, we've been covering this in depth over the past 2 days, as you'd expect. But I mean, do you think we'll look back on click and collect as the saviour for car dealers, or is it just the way things are going, and that's just the momentum, the direction?
I mean, from the stuff that I've been reading and chatting to some of the digital platforms, etc., customers just want to be handled in the way that they want to be handled, and it's different for everybody. And some people just want a car to turn up and they don't really want to test drive it, but lots of customers just want this blended individual journey for them, and frequently involving going to the dealership, test driving the car and asking for advice, because in the nicest possible way, we've got a huge change coming over the course of the next 9 years as we move to electric, and people need help through that. I mean, we're sort of championing in the press release today the fact that we over 10% were non-ICU, for want of a better terminology, given the fact that the industry seems to be able to create more hybrid categories than certainly the consumer understands. But we've got this huge journey to go on, and customers want help, and frequently help from a trusted advisor in a new or used car dealership to help them get there.
Yeah. But and that is something we were trying to get across yesterday, is that yes, click and collect is a blanket term. It's something that all non-essential retail can do, which of course is car dealers. But the important thing in all of this is that yes, showrooms may be shut, test drives may not be allowed to happen, but car dealers, they're still at the other end of the phone, they're still at the other end of an email, and they can still talk to customers and sort of help them in the sale of a car, can't they? And this click and collect terminology, it's assumed that people are just buying cars outright online with no help whatsoever, and that's not true, is it?
No, absolutely not. And we still see a huge difference in the digital responses from different businesses. My car owning experience continues to provide me with little gems. I need my car servicing, so I emailed the dealer an inquiry at the start of December. No response. And it's so not everybody is yet where we need to get with regards to this digital transformation, and we'll see the best dealers and the dealers who really do get it. And this isn't just the new car retailers, by the way. This is sort of the best used car retailers as well. That individual speed of response to the customer and giving the customer what they want, whether it is physical or virtual, will produce the winners as we go through over the next couple of years.
Yeah, and it's something that we'll be able to see in the car dealer top 100, won't we? Really, and once we bury down into the results for next year or 2021, that would be very interesting to look at. Well, you mentioned electric cars there, and let's just talk about that, because in the data released by the SMT, around 20% of new cars in 2020 were diesels. I mean, that is a staggering figure, really, when you think about it, to where we were 10, 20 years ago. Contrast that with pure electric cars. Their market share rose from 2% last year to 5.8% in 2020. And when you add in plug-in hybrids, it's 1 in 10 cars in 2020 were electrified. It's a new record, and you can see that because the December best-selling car wasn't the Ford Fiesta or the Vauxhall Corsa. It was the Tesla Model 3, and that we saw that at the height of the lockdown as well, didn't we? The Tesla Model 3 was particularly strong there. What do you think's influenced this? Is it a combination of, like you said, Tesla year-end trying to increase their sales? Is it people are getting to grips with electric cars now? Or is it the fact that Tesla offer a streamless online service and people are really sort of, they like buying Teslas? Not me personally, but having been involved in the purchase of a Tesla,
it's not as good as the marketing would have you believe in any way, shape or form. But a lot of what they do is more attuned to the sort of click and collect model, because that's really effectively what a lot of people do with Tesla, and they're buying the car without necessarily always driving it. But it was interesting to see that even Tesla getting into the month ends, quarter ends, year end sales rush that the industry is more than used to, with Elon Musk basically saying that everybody will have free self-driving capabilities if they take delivery of the car before the 31st of December. For the last 3 days of the year, trying to ramp the sales and hit his 500,000 number. So no, I mean, we are undoubtedly moving towards electric. Interesting, the diesel number is, as you quite rightly say, interesting to look. But with overall fleet being just over 30% down, a lot of your traditional sales reps, for want of a better term, where electric is a little bit more challenging from a mileage point of view and a charging point of view, would naturally have fallen into diesel. So it'd be interesting to see what the split would have been there, and whether we do get a bounce back once we all hit the road once more when Boris allows us.
Yeah, absolutely, and it's a step in the right direction. But as we know, 9 years, a lot can change in 9 years, but it really does need to change a lot in 9 years for electrics to really become, the default choice for car buyers from 2030 onwards. Now, I just want to have a look at car brands. I don't know if you've been able to have a look at car brands whilst we've been talking. I don't know if any car brands there sort of jump out at you for the big winners and losers. To me, there doesn't seem to be a huge number of surprises, really. It seems to be pretty much above board, really. One thing that happened in 2020, of course, was announcement of Mitsubishi. They're going to be leaving the market. I mean, do you think we may be seeing a little bit more of that in 2021, where car manufacturers are looking at their UK operations and thinking, well, perhaps it's time to call time on the UK?
I think it's fair to say that all brands are looking at their distribution channels and their route to market, and are seeing that with the amount that they've got to invest in electrification over the course of the next few years, they need to cut cost out of their distribution channel. Now, some people are doing that by concentrating on certain markets, and some people are looking at rationalizing the number of dealers, and we've seen that steadily happening over the course of the last couple of years, and I would expect that will continue. So the brands need a more efficient chain to get the vehicles out, so they can save some money in the nicest possible way and invest it where they in the R&D that they need to undergo over the course of the next few years. I see it being a gradual change rather than a massive seismic change, but you sort of look at what's going on with sort of Stellantis. The number of sites that they're going to have across that brand in the UK is huge. Whether they actually do anything more serious than they have been doing or not is clearly to be seen. But there's an awful lot of distribution points for one company across the UK.
Yeah. I don't want to be one of those people that says it reminds me of the days of British Leyland, but there is a faint whiff of having so many brands that compete against each other, especially in that very pressurized mass market volume sector where we know it's very, very tough at the moment. So it's going to be very, very interesting to see what Carlos Tavares does, really, because as we know, he doesn't take prisoners, really, does he? And he takes the tough decisions. So it's going to be fascinating to see how that pans out over the next few years.
But his sort of mantra of "we only sell things that we make money out of," that's fine. I mean, but it's sort of harking back to what we were talking about earlier on, from a retailer profitability point of view. If we got a better balance between supply and demand, then they can make more money. I mean, we're seeing this move in the entire industry across the board towards more fixed price vehicle sales, which will ultimately build more trust. It's going to take some customer education. It's going to take the number of people in the trade to change their working practices. But we've seen that get a kickstart in 2020. And even if Tavares does cut back on volumes, etc., then as long as it's done in a managed way, the retailers will cope.
Yeah. And also we've got to bear in mind in all this, just because the likes of you and I and our viewers know what Stellantis is and which brands compete against each other. Let's face it, the man on the street, or the man or the woman on the street, doesn't really know whether a Peugeot is related to an Alfa Romeo or a DS or a Lancia or whatever. They don't really care, do they? And
you look at the number of consumer brands that we have, that Unilever have, let's say, or they run multiple brands phenomenally successfully. I suppose the challenge is to get that efficiency in the production, have the limited number of sort of bases and battery setups that they're powering these vehicles off, and then just putting different shell on. As we've seen with Volkswagen Group for many years, and they managed to sort of. We saw during Dieselgate that the consumer doesn't either know or care. Sort of the shared heritage of some of these brands, and they're just looking for their next car and the next thing to help them get around.
Yeah, absolutely. Now, just the last thing I just want to talk about, it's not related to the figures announced today, but it's something that caught our eye yesterday. It's big industry news. Honda. Now, they closed their production lines yesterday and today because of global supply issues. Do you think this may be something we could see more of in 2021, or is this a unique set of circumstances unique to Honda? You know, closure of Dover, you know, Brexit, all this kind of stuff, and it's been a bit of a perfect storm. Is it unique to Honda, or could we be braced for a bit more of that this year?
I mean, you know, all of the car brands or the car plants warned of supply shortages and the problems that they were going to have, and that was before, obviously, the French decided to shut Dover for Dover Calais for a few days when we announced our new variant. So, you know, the just-in-time nature of car production means that they rely on the steady stream of parts, and any small disruption to that does have big ripple effects. So no, I would imagine that we will see it across the board in one way, shape or form as people get used to the new paperwork requirements. And you know, it was really, really tough given the fact that the rules that we had to comply with weren't announced until so late in the process. And then fortunately, from a rules of origin point of view, that's been sort of punted a bit into the future. But as and when it comes in, you know, I can see that people will continue to have a big challenge to keep these sort of highly oiled machines running with the just-in-time nature of the production process.
Yeah, no, I agree. Now, thank you. That's brilliant. Now, just a bit of a recap of the headline figures. 2020 registrations totaled 1.63 million units. That's down 29% year on year. December market was down 11%. The best-selling car in December was the Tesla Model 3, and the best-selling car of all year was the Ford Fiesta. Mike, thank you so much for coming on as ever. Really great to get a bit of detail in all of these numbers. And well, thanks for coming on. Also, you're going to be publishing the profitability results for November, aren't you, this week or very soon?
Yep.
We'll be covering that. Fantastic. But as ever, Mike, thanks very much for coming on.
No problem, an absolute pleasure.
And that's it for today's Car Dealer Live. If you'd like to be involved, then please do email us. But for today, thanks very much for watching. Bye-bye.